4/29/2020, we're going to give the Apple coverage that we did, and we have exited the trade, and we did. So basically, the $280 calls we bought at the lows yesterday because it couldn't break down any lower. And it was a great setup at the lows for Apple and whatnot. And we have a gap. And the low end of the gap this morning, my friends, is 283.8. Close on that bar was 285. So we traveled and we hit the high up here of 289.6. 3-minute reversal bar to support. Opening bell gap. Call options, 280 calls in the money. They don't move a lot, but it's a nice gain. Not like the other ones. They're much bigger because you have a bigger dollar price movement. But Apple's doing quite well. And so we're going to continue to watch how these stocks move higher based on vaccines like Gilead this morning and whatnot. But the most important lesson that we're going to learn together, we are option market makers. Get into the live trading room. There, we're going to have our performance. There, we're going to work with the app. We're going to work with the algorithms. And the algorithms are high-frequency algorithmic bots. They take the prices in one direction. They also will tell us as the prices go down. Everything is based mathematically at a 64 IR with a top reversal on Apple. If you don't sell out of the calls up here, then the calls simply drop in value, and then you're sitting there wishing, oh, well, I wish I would have. Oh, well, let's go ahead and put a stop to that, and we'll do it together. How's that sound? Once again, opening bell gap, the 280 calls, Apple, and you could have bought them in the money, or you could have bought them at the lows yesterday when Apple had sold down with the broader markets and went for the volatility gap. So they got the volatility gap, and then from the low to the gap. So the low of the opening bell gap is 283.8, and the high of that gap is 289.6. Each line is 48 cents per 116 teeny value mathematically. You could see the reversal. If you don't sell out of the calls, you don't get to keep the value. It's that simple. Join us today. Let's go ahead and do this together. We have this system. When the IR goes down in value, you can see why it doesn't lag price. It's a GPS. It's not deceptive. Mathematics don't lie. And it's here for you. It's waiting on you. It's inviting you. It's inviting you to be successful. All you have to do is simply sign up for the free 5-day trial and get to go with it. Get to go through it. Get to go through the reversals. Get to see the differences. What are the tools? Why are the mathematics? Why is it that each line is mathematically 100% right at 48 cents per line? So as we move forward, Apple is a very good stock, but it's a trade. That's all it is. We make the market on the call side. We also make markets when they fail out there. There's a market to be made when Apple goes down as well. There's always two sides to every market, and we know that. The major lesson learned is when you're in the call side of the market, you do make the high like that. You have to ring the register on that diamond reversal bar right there on that 3-minute. And this is what we're here to do. And this is why we're inviting you. We have a support level right here. It goes all the way back over here. Where it consolidated and made the highs. Now we're going to see if the buyers come in or not. Do they have conviction? 64 IR, 48 cents up. There you go. We cashed in at the top. We can always look for more entries, but it was a good one today. Let it be knowing when to sell the option.